Okay, people, it's time to go live again. Another session, another important one. This is about a bank run. Clearly, historically, it is happening right in front of our eyes, which I find quite amazing. Hey, but then that's life, right? This is cool. This is something that, we should be happy because we're just witnessing something and we await the response of the Federal Reserves, knowing their inaction or rather slow reaction to 2008, which caused the Great Recession, or rather the speed of events before they could even take action. So it's kind of interesting of what would happen now. I am going to show you my face very soon. Here we go to the Zoom. And welcome again. Now, you can't see the tallest building in Malaysia now, right? It's somewhere behind there. Okay. It's somewhere behind there. But man, we do live in interesting times. And, it seems that, there are problems and problems and problems about this market. And, just when you thought that we were about to enter a bullish phase, it starts having its moodiness, and now could be even throwing us back to a bearish phase. We do not know. We need to know what happens in the next few weeks, especially if the Fed or the American regulators start to take action or not. Now, if you haven't so, please join my Discord for more tips. Not my Discord, my Telegram group, right? My Telegram group for more info here, for more info. We put it here. That is https t.me. So join there. And also don't forget my TikTok, okay? Yeah, you can find it there in the links down there. Don't forget my TikTok. I'm just putting it in the comments so that you can easily follow it, okay? So I have two TikToks, one in Malay and one in English. Don't forget my TikTok. Don't forget my TikTok at this. TikToks are good. So I am going to blog more on this in Malay and also in English. TikTok.com. And I'm going to put there Sensei Shukri _AE. Okay. Okay, guys. So again, history is about to be made. Things are such in a mess in the USA. Let's go and see what is happening now. And let's go change this. And even USDC, man. Is crypto in big trouble? Well, looks like it. But of course, what we want to see first is the fear and greed index, right? Fear and greed index. So let's go and look that for crypto first. I'm going to change the screen now. There's my screen change here. And we really want to find this. What's going on here in cryptos, guys? Somehow, let's see where Bitcoin is. I think it fell by quite a lot. The 2000, as 22 announced at 20. Wow, that's a lot after losing 24/7, after losing 24. So, man, it's all red there, man. It's all red. It is in a sea of going down here. But let's see the fear and greed index over here. Investor sentiment. First, let's go to TradFi because TradFi is causing all these problems with this bank run on Silicon Valley Bank. And it's quite interesting. And we're going to go through it on what the person says here. Really the classic dynamics of a bank run. Okay, first fear and greed index here. Oh, this is cool. I love this. We're at extreme fear. So we actually can have a chance to turn around, okay? Because I was like, hey, come on. We haven't been in extreme fear here. So we are here now. Okay. We're below the 125 MA. That's kind of cool. Okay. Okay, look at this. Goes below. Retest, fails, go down. Retest, go down. Okay, go up. Okay, go down. So 125 MA is there. Let's find the Bitcoin fear and greed index. Are we already at extreme fear? I want to find Bitcoin. Yes, let's find the Bitcoin here. It'd be good to have Bitcoin also on extreme fear so that we both have both fear so that there is a chance of a little bit of recovery. Let's go here. I want to go here. Let's go for the fear and greed and fear index here. And let's see how we are. We are at fear. We're not at extreme yet. Okay, where will we go to extreme? Let's go to extreme, guys. Okay. Let's go to max. Where are we now in relative to max? Okay. It should be around here, right? It's either going to turn here, look at that, or it's going to turn here. I hope it doesn't go here. This is bad. Okay, this is very bad. So hopefully it turns around here, right? Just a couple of more notches and yeah. But again, this depends on the gravity of the situation. Of course, this could get much worse. And all that we are talking about in real time is FVB, the run. It is a real bank run. I have not seen this in my life either, okay? But this is a real bank run where if you cause a lot of bad news, or rather, you guys know, right? The bank works on a fractional reserve system. It doesn't have the money. Like if you put in $1,000 in a bank, if you are the only customer in the bank doesn't have that money if you want to withdraw that money, because the bank is probably putting your money to work, putting it in other assets that can earn higher interest to give to you. So if you go and withdraw it and want to withdraw it at that same time, you won't have that money. That's what it means. So if 10 people say that the bank has 10 customers, 8 people go at once to bring out the money, it will collapse. That is what a bank run is, okay? So let's see, crypto shaken, yes. And even this crypto, something called USDC. I mean, I never thought that USDC, this would happen to USDC. It seems to be well run by Circle. But look what happened here. It lost its peg. Incredible. How can USDC, a stable coin, lose its peg? Let's go and see this. Let's go and see this historic thing. Oh boy, let's go and see this. I want to see USDC here. What is happening to USDC? It was like 84 cents, was it? Okay, now we're back. What? Are you serious? 387 and sorry, at 25. Let's go to CoinMarketCap. I don't like this number being shown by CoinGecko. I want to see CoinMarketCap, higher number for Bitcoin. Or did we go down again? Yeah, that's right. We always like to go down again, right? 538. What's wrong there? So look at that. It's what is this? 95. Was it 84? Okay, was it 84? Let's go here to USDC. And if you bet that it's going to 1-to-1 again, you can buy this knowing that it's going to 1-to-1. You make 5%, but it's kind of a good risk, because you make 5% for kind of like nothing, right? Let's see where it is in the past 7 days. 92. Okay. Whoa, look at that. Wow. 98, 90, went down to 90. My God, 90. Whoa, that's a lot. Okay, so even this has lost the peg. And of course, what did USDT do? So, people have said a lot of bad things about USDT. So did USDT fare better than USDC? Okay. And probably that people were taking the money out of USDC, they're probably putting it in Bitcoin and Ethereum and all this, right? Which explains Bitcoin and Ethereum going up. So Tether is good. Wow, Tether is the star now instead of USDC. Okay. And now the next one is DAI, because DAI has things pegged to Ethereum and even some things pegged to USDC or something like that, right? Look at that. Even this has fallen 95 cents. So USDT has been the strongest. The much hated USDT is actually the strongest coin, the strongest stable coin now. I just want to see this. Now, I'm curious about Justin Sun and his USDD. Is USDD still there? Let's see what happened to Tron. Okay. USDD. Okay, is Justin Sun starting another this one? Okay, it fell again. 96. Look at that. So this is Tron. People are saying, hey, is this another Luna? UST, right? Is this another UST thing? Look, it fell. Wow. So only USDT has been able to hold the peg. This is kind of like very, very impressive. Okay, now who would have thought the much hated USDT has held on the peg, has held on the peg. So let's see what a bank run is, okay? And I'll tell you what's happening. Held on the peg. But is this the end of crypto? Where is USDC going to? Well, they already said, right? They promised to redeem your USDC at $1. So you're going to get that from the reserves. But really what's happening here, following the confirmation at the end of today, the wires initiated on Thursday to remove balances were not yet processed. 3.3 billion of the 40 billion of USDC reserves remain at SVB, Silicon Valley Bank. Okay, so the rest they remove. And then what is the conclusion here? Hal Press of North Rock LP says Circle holds 77% of their reserves in 1 to 4 months T-bills. These are government bonds. So it's good to have the US government owe you because the US government usually pays you and does not default. Kind of like this, okay? You want government fund guaranteed by the government. Even Malaysia, when I put it in safe funds, I put it in funds guaranteed by the government. These T-bills are held by at BNY Mellon, very established bank managed by BlackRock. Okay, very established, kind of like the extension to the US government, biggest asset manager in the world. This provides an absolute floor of USDC of 77 cents, okay? So you're going to be only losing like 23% of your portfolio that you thought was safe because you moved it in USDC. This is just great. So what is the definition of a bank run? What in the world actually happened? Well, let's see. So we follow here Danny V. Hey, Danny V. Yes, where are you? Go back. Let's go to Danny V. So you guys got to know this because I feel there's a lot of things that are below the surface that we do not know. And you guys may freak out. So my intention is to make you guys freak out. Okay? Okay. Let's see this. Where's Danny? Where's Danny? Where's Danny? Okay. Earlier today, America's 16th largest bank, Silicon Valley Bank's collapsed. A total of 175 billion customer funds are now at risk because you have to know, if you guys ask what about insurance, well, they only insure in the US 250,000 US dollars. Anything more than that is not insured. Okay, so 250,000 US dollars, about 1.2 million ringgit or something like that is insured. It's the same thing for Malaysia, right? Not your entire deposit amount is insured, only a little fraction, okay? So if you want to do this, you better keep it in many, many banks. Don't keep millions in the bank because not all is insured. So the thing is 87% are uninsured. So if you keep like 5 million in this bank, only 250,000 is insured and the rest are quote unquote at risk. Here's what happened in English and why you should care. Okay, this is a nice one. This is a nice one. Don't listen to Jim Cramer. We'll get that back here. Okay, we'll see that. So let's see. What does he say? Silicon Valley Bank, SVB. SVB advertised itself as a partner for the innovation economy. Yes, a lot of startups bank with SVB. If SVB goes down, the entire startup ecosystem might crumble because all their money is there. Just imagine a lot of startups, they burn money. They need to pay people. And then suddenly the money is not there. Do you know how significant that is? That is so significant. Let's go down again here. Don't listen to Jim Cramer. Okay, the most popular bank for tech startup, like all banks, SVB takes in customer deposits. In 2018, SVB had 50 billion in deposits. By 2021, that number exploded to 280%, 190 billion. Why? Big tech profiting from COVID, yes. Solar technology companies profiting from COVID as the world went online, loose lending standards. SVB put customer deposit into long-dated bonds, right? Because in COVID, the interest rate was low, so they put it into government long-dated bonds, the Fed. So they supported their government. These bonds promised relatively high returns, especially in a zero interest rate environment. SVB then used the returns to offer their customers better interest rate. That's fine with me. They're doing the right thing. So take deposit, buy long-term bonds, offer high interest rate, attract more deposits. So that's what happened. More money came in, and that's when the problem happened, because there was so much money now. What if interest rates went up? What if people were now more interested in shorter term yield than longer term yield? And that is when we have the problem. So beginning last year, Fed started raising interest rates. 3 months T-bills from the government now yields 5%. Who wants long term when you have short term? People want short term. So the long-dated bonds SVB holds, earning a couple of points interest, they're worth a whole lot less today. Suddenly you have a big hole. You have a big hole, right? Because you bought something, it went down, and that's tied to customer deposits. So at the same time, the economy is contracting, tech startups are short on cash. What do? Ask for their money back, which forces SVB to sell all these long-dated bonds at a huge loss. So this is what SVB said. They revealed they had they lost 2 billion selling bonds. Chaos ensued. The stock dropped 60%. It dropped even more. Regulators shut down the bank. 175 billion customer deposits are now at risk, except the ones that are insured. They can get that money back on Monday. No one knows for sure. The FDIC stepped in. Their job is to liquidate the bank's asset to pay back its customers. I do not know how much they will get back. Some people say like 85%, 87%. Startups who bank with SVB are panicking without access to the cash. They're struggling to make payroll. Rippling is worth 11 billion and handles payroll for thousands of companies. Here's the CEO on the SVB news. We, Rippling, discovered yesterday that SVB had unexpected solvency challenges. Just now, we learned that the FDIC had stepped in and effectively shut down SVB. So everyone's panicking now. Look at that. No one quite knows the extent to which other financial institutions may be at risk. Many hold low-yielding assets just like SVB did. Those assets are likely underwater thanks to rising interest rates. See, so the Fed really destroyed these people and probably a lot of banks. That's why I've said there might be a contagion effect. Could SVB be the first domino to fall? Time will tell. This really depends on what the Fed does here. I think they really have to backstop this, or everyone is in really, really trouble. The innovation economy in the US is in really, really big problems. SVB is a top 20 bank. It sold bonds at a loss. Customers freaked out. Classic Bank run and sued. Regulators to control. SVB shut down. So again, startups, VCs, and CEOs are at risk at losing a bunch of money. This is a disaster. Don't listen to Jim Cramer. Jim Cramer said Silicon Valley Bank was about last night, 320. I hope you didn't buy it. Today, it's closed by California regulators. What did Jim Cramer say? Man, inverse Cramer is so good.
About SVB Silicon Valley Bank recently bought one of our favorite research firms, MoffettNathanson, and it's become less dependent upon private equity and venture capitalist offerings. Wait a second. Those dried up last year. They could come back. Yeah, some of them come back here, but the stock directly affects an oversold position. Stock was the fourth worst performer in 2022. I think the fears were not justified, and it's a very compelling situation. Hey, by the way, long-term private equity and venture capital, they're not going away. Being the banker to these immense pools of capital has always been a very good business.
Really? Let's see. It was 320. Let's see what it was. Hey, this even touched crypto, man. See? SVB. I hope we don't, I don't know what is the equivalent of SVB in Malaysia. Got to be careful of all these things, man. I know that Maybank has something in what? Adani, was it? SVB Financial Group. Let's see what it was. Let's see what it is. It's like 38. I think I saw it at 38 or something. Oh, SVB. No, it was at 38. It was kind of like 38. But then they didn't allow it to trade, right? They closed it. Okay, they closed it. They closed it. Okay, but look at that, guys. Look at that. That's like, it's crazy. Look at that. Ooh. Yeah, went down here, right? Just like that. 466. Wow. It was actually at 38, but it wasn't allowed to trade because it was just gone, gone, gone like the wind again. So again, it's very interesting to see if SVB has those long-term assets, those long-term bonds that are underwater. What about the other banks? What about the people who bought those bonds? All because our good friend Jay Powell didn't want to pivot. Well, now we'll see what he does. So March 22nd is it when he has the interest rate. It's very, very interesting. I think that is the most important thing. I know we have the factory news. See, it doesn't matter now that even if this is good news, that if the Fed steps in to rescue Silicon Valley Bank, that would be a boost to the market, because then they say, okay, the Fed has finally pushed and pushed and pushed until something breaks. And this is interesting. Is the Fed now going to step in and finally admit, hey, it pushed too much, and finally going to slow things down? But anyway, we have CPI on Tuesday. But again, as I said, Monday and Tuesday are key. If the Fed steps in and rescues the banks, hey, that will be good, because this is the second major failure after Silvergate. Silvergate, they blamed it on crypto. What do you blame? What do you blame Silicon Valley Bank on? Can't blame it on crypto, right? This wasn't crypto, but this is so important for the startup industry, because without the startup, there is no innovation in the US. Okay, so this is very, see, everything is about SVB now. I would avoid every regional bank. So what he's saying is, hey, avoid all the small banks amid this. Let's see this. Avoid all the small banks. The big banks seem to be surviving, but they're worried about the small banks. Yeah, I would be worried too if I were in the US, because now I know that, hey, they're probably holding a lot of assets that are underwater. Let's see this. Failure and contemplate the effects this may have on regional banks. Yes. Where can we find other articles here? Feeling anxious, sad, and confused after its collapse. There's going to be more. Yes, this is the thing. There's going to be more. How Washington is bracing for a bank fallout. As Silicon Valley is on knife edge after the collapse of SVB. I'm sure there's a lot of people in Silicon Valley now. Yes, Silicon Valley collapse is what happens when an everything bubble bursts. It is bursting now. And the good thing about bursting is, what does this guy do? Massive market bubble finally popping. Wall Street commentators agree the Fed had a hand in this chaos. Yes, because it just raised rates too fast. You know, when there is near-term interest rates higher than longer-term interest rate, your papers that you bought a long time ago are now worthless. It's not a stretch to say this episode is emblematic of the higher for longer rate regime. Yes, higher for longer, not lower, not higher, shorter. That destroys things. Natural result that's engulfed market in the past decade finally bursting. So everyone now is asking, is this going to be another 2008? Are we going to go to 2008 again? Well, maybe. That's why next week, guys, is probably one of the most important weeks again. What I've seen before is that there'll probably be some backstop. Unfortunately, it wouldn't work. And then it goes down again. And then we find the real solution. But let's see what the backstop is. I just cannot imagine them allowing Silicon Valley to fail, you know. So it'll be interesting to see what happens really next week, okay? And very, very interesting, right? And let's go back here. So again, at least you now know what a bank run is. You now know what is happening here. And then you know what to do to avoid it in the future. Let's see more news on this. This is interesting. This is a good lesson in life, because this could happen anywhere. Hey guys, it can even happen in Malaysia. Who knows? Okay, why is it giving this? Why is it giving China anxiety? I don't know. Do they have startups in the US? What's happening? Chinese stock investors already disillusioned by Beijing's lower than expected economic growth target for the year. will be further disheartened by the sharp collapse of US lender SVB Financial. Also, the Chinese dropped 4% last week. Hong Kong's Hang Seng tumbled 6% as China's moderate growth target around 5% for 2023 set during the annual session of the Central Parliament dashed hopes for a big stimulus. So China may not stimulate again because one of the factors for crypto going out was China putting money in the market, right? May not happen now. And let's see about this. FVP is a barometer of macro risk. So as long as the startup companies go down, there's not going to be a lot of risk. Although the event will unlikely trigger another financial crisis, it could have negative psychological impact on China markets. SVB's Chinese joint venture, really, Shanghai Pudong, that has sound corporate structure and an independently operated balance sheet in an apparent effort to pacify local crowd. Oh, this is interesting. So you might even go to China on Monday morning. Let's see what happens to China tomorrow. Many Chinese tech startups, especially those in dollar funding, have opened US accounts at SVB. Okay, this is a problem. At least one WeChat group with several hundred members have been formed by anxious Chinese clients of SVB seeking to safeguard the assets. Oh, okay. Looks like to be a risk off. Okay, so again, this is happening here. But again, when you see all this, right, you know, what is saying here? Let's see.
Shares of Silicon Valley Bank, also known as SVB, nosedove yesterday, causing a ripple effect for the global equity markets. They're now halted, and CNBC is reporting it may be looking for a sale. And while Reuters reports employees have been asked to work from home, now Fed policy, of course, playing a big role in all of this, but exactly how? That's a key question. And Yahoo Finance's Julie Hyman can help explain.
How Fed?
Julie, help explain.
I'm going to try here to explain how rates are playing a role in all of this. Basically, it has to do with the assets that SVB held on its balance sheet. Apparently, the company was forced to sell treasury bonds as well as mortgage-backed securities. It sold them reportedly, according to what we're kind of teasing out from the situation, because it needed to raise capital, because its clients, venture funds, startups, et cetera, were withdrawing money. The company needed to raise money, and so did a sale. It did a sale at a loss. And what is the Fed's impact on those assets that it held on its balance sheet, like treasuries? Well, of course, bonds are very sensitive to interest rate changes. The Fed has been raising interest rates. The market price of existing bonds drops and the yields go higher. And then new bonds come on the market on higher rates. Banks are not required to write down the value of these types of assets on their balance sheet until they sell them. And so large banks, for example, which tend to be better capitalized and don't have as many withdrawals that they need to then raise money, they're in a better position. They don't need to write down the value of these kinds of assets.
So this is the thing, right? Everyone's negative, you know, everyone's pretty much negative. But if you don't go and ask for your deposit back, if you don't do a run at the bank, everything should kind of balance out and recover in the long run. However, you guys go and run by the bank and ask your money back, then things are not well. Having said that, there's one country where weird things happen. While this is all happening, hey guys, the IPO market in Malaysia is like strong. So on Friday, we saw the listing of Cape EMS. Amazingly, from 90 cents, which is quite a big stock, it went up, it closed at 150. And this was the highest closing in the main board since last year. Awesome, awesome, awesome. The Malaysian IPO market is coming back. The Malaysian market is coming back. Just like I told you guys that PMX, the PM10 is going to change a lot of things. So congratulations, Malaysia. See, best performing main market stocks on maiden day since 2022. I was quite surprised that it could go up because this is the main market stock. Jump 67% or 60 cents to finish at 150. Made it the best performing main market IPO stock on its maiden trading day since last year. Fifth among its peers with debuted so far this year. Look at that, guys. Look at that. IPO performance on Bursa Malaysia. Look at that. LNP Global. Wow, 85%. Look at this. DS Sigma, Nation Gate. Look at that. Awesome, right? This is awesome. So Cape EMS, they are doing very, very well. Okay. Wow. So yeah, one of them had the December last year, 29%, Farm Fresh, 27%. But man, this is great. Okay. So again, we have another one in Malaysia. And look, the smaller ones, which are on the ACE market, TT Vision had 276% increase. NationGate 163, WellSpire 86.96. Now we're going to have another similar one called Opstar, which is a semiconductor designer, a company which is mentioned by the PMX Anwar Ibrahim listing on Wednesday. Another big test. If that goes well, hey guys, guess what? Guess what? Malaysia is back, okay? Look at that. Even LMP Global, 82% gain. Oh my God. So this is great for Malaysia. So let's see how it goes. And of course, on Wednesday at 9:30 a.m., I shall have the IPO live back again, okay? IPO live will be on. IPO, just look at my social, join me there on YouTube. It'll be in Malay, it'll be in my other YouTube channel, Meta X, okay? So look for my links there, okay? Look for my links there and on Facebook, okay? So we'll be back 9:30 at the listing of Opstar, which we expect again to go to the moon again. Because, okay, as the markets go tanking, PMX is like turning the markets around and Malaysia goes up, right? Other markets go down, Malaysia goes up, right? Other markets go down, Malaysia goes up. Other markets go down, Malaysia go up. Malaysia is back. I'm going to see you soon, guys. Bye.